in business. That's really important to us, and I think that best positions us for the challenges that lie ahead. And of course, we still will maintain a significant stake in Glanbia PLC, so we want to be set up in a very, very strong cooperative society. I suppose just maybe a little bit of background of where did all this come from. Was this something that's a flash in the pan idea we had about a week ago or 2 months ago or whatever? But no, look, in realistic terms, this day was always going to come. When we bought back 60% of ingredients back in 2012, that was followed up by the purchase of 60% of consumer foods and agribusiness back in 2017. So at some point, it was always going to come the day where we'd finish out and take full control of the business. And I think now is the right time to do that. I suppose we started this journey, the board back last spring. I suppose last April we met and we had a lot of meetings about strategy. And in April, we decided that it might be good to appoint an outside kind of a financial house to give us some outside advice. How are we maximising our vast resources to the benefit of our shareholders? Is there more we can do? And we felt now is a good and opportune time to have a look at those opportunities. I suppose at that stage, Siobhan Talbot, stepped back from the Co-op board for this particular process, as did Michael Horn, because they didn't want to be conflicted, because any strategic review worth its salt would have a look at the ownership of the 40%. So when Siobhan and Michael stepped back, the board appointed Jim Bergen here and Sean Malloy to join us as the professionals in the room to liaise with us, the board, and the advisors through this process. So we've worked diligently since. I suppose the first thing we've done was appoint advisors. We looked at a number of advisors, and we're delighted to appoint here on my left David and KPMG International. Huge experience in this area. And I suppose one of the main reasons we appointed David and his team were their capability we take as a given, but we really wanted somebody independent. So KPMG haven't worked for either the Co-op or the PLC in a number of years now. So we felt they're best placed to come in and give us kind of an independent overview of what's possible. So I suppose their first decision was, what are we doing the strategy on? Are we doing it on a 40% or 60% ownership or 100% ownership? And after our first 3 or 4 weeks of work, it became fairly obvious fairly quickly, that 100% control of the dairy processing assets, the grain business, that was the best way to achieve the aims of our suppliers. And the aims of our suppliers is a really strong milk price, a really strong grain price, as simple as that. So when that decision was made, I as chairman, I travelled to Canada and met the chairman of Glanbia PLC, Donard Gaynor, and we expressed an interest in acquiring the 40% assets of the PLC in Glanbia Ireland. I suppose a week later, the PLC appointed advisors, and we got into talks and we got into an evaluation process. I think the board would be quite sensitive on price. We're 14 farmers after all. So, we were very, very sensitive on price. And in fairness, David and his team done a really diligent job using all the data we could throw at them and all the reasons in the world as well that we could throw at them as a Co-op board, including things like profits, inflated profits, we argued, because of the Co-op supports over the year, sustainability challenges, the numerous challenges that lie ahead, for our AWARE project, all that. We threw everything ahead. In fairness, we came up with a price that we think is fair, and it's a price we're happy to stand over. So what are we doing? I suppose in a nutshell, we're buying back, as I said earlier, the 40% stake of Glanbia Ireland, currently owned by Glanbia PLC. I think this is a fantastic move. We're buying a strong, well-invested business, a business that we've invested 559 million in over the last 7 or 8 years. So it's well invested, it's strong. We have 5,000 farmer suppliers of dairy and milk. We have a further 1,000 suppliers of grain. So we're a really strong quality base of supply into our company. We have 2,000 staff, committed staff, really committed to our ambitions. They're working for us across the country and across the world every day of the week. We have a brand new R&D centre, which I'm particularly excited about, because this is where we see our add value coming in the coming years. And with Glanbia, we see the last few years have been all about expansion. We see the next few years are all about add value. And of course, above all, we have strong brands, we have markets in 80 countries, and we have ambition and we have confidence, and we are really ready to take the next step as a Glanbia team. I suppose on top of that, we also end up owning 20% plus of Glanbia PLC. That's a significant investment, and it's an investment that will be throwing off 20 million euros per year of a dividend to our new society if these proposals are approved. We also are proposing to create an investment fund of 160 million euros To me, this is the most key part of our strategy. This is the real ambition in our proposals. We really want to invest in higher margin business alongside the dairy business. We're totally committed to the dairy business. We'll look forward and hopefully get a positive reply from, to our planning permission down in Bellevue for a cheese plant early in next year. But we expect, growth of 3 to 4% in dairy, even with the environmental challenges. So totally committed to that. But I always argue, just owning your own dairy in itself, that's not a game changer. Every dairy in Ireland, they own their own dairy, or in Europe or in New Zealand, wherever you go. So we see this as the game changer, an opportunity to invest in higher margin business in parallel to our really strong dairy assets. So we're looking forward to getting into that area as well. It'll be a new area for Glanbia Co-op. But we have the confidence and we have the skill sets and we have the management and we have a lot of knowledge we've learned over the last number of years in PLC world to go ahead with confidence and do that. And do that for you our shareholders, to return higher margins. Of course, we also have a spin-out, 12 million shares of a spin-out. Again, I think it's really important from time to time that we return some of the value we created to you, our shareholders. On this proposal, we propose to spin out about 160 million euros. And over the last 9-10 years, we've spun out 740 million. So this is 900 million in total. So it's a phenomenal figure, and it's just a testament to the phenomenal success of our co-op. We're not going to forget our all dividends. We're going to play a progressive dividend going forward. We commit to that. And we also commit, to that investment fund, that 10% of the income from the fund will come to the shareholders by way of dividend. So it's not all going to milk and grain. It's going to go to increased dividend as well. So why are we doing all this? Quite simply, we're ambitious. We're ambitious for you, our farmers. We're ambitious for the company. For our farmers, as chairman, and I lead a board who really want us to get the strongest price possible for our dairy, the strongest price possible for our grain business as well. But in parallel with that, we're hugely ambitious for Glanbia Ireland, as I stated before. And our aim, is to do a step change in the company. We'll come from a position of strength, but now we want to transform Glanbia Ireland to one of the leading European dairies, one of the leading European dairy and food companies. And we know, as I said earlier, we have the capability to do that. I suppose, financial discipline will come into this as well. And now this new system, we won't have to work or aim for any particular figure, but we will be aiming for a very strong financial discipline. You expect that from Glanbia, you expect that from your board. I don't see profit as a bad word. We must make profit to grow and prosper and invest across the world and make higher and higher returns for you, our farmers. These proposals have the unanimous support of our board. We have debated them at length, and I have to say many thanks to the board for the hours and the days and the weeks and the months we've into this project. So again, unanimous support, and together with you, our members, we can create the co-op of the future. Your co-op, a co-op 100% owned by dairy farmers, but not just dairy farmers, grain farmers, our members, 100% owned, 100% controlled, and 100% run for the benefit of you, our farmers. So look, we feel this is the right decision. This is the right time. We're looking forward to the challenges ahead, but we're fully sure that this new proposals will set up your co-op for the many challenges and even more opportunities that lie ahead in the coming years. I suppose I'd like to say, I think this is a win-win, a classic win-win actually for the PLC and for our co-op. This will allow the PLC to focus on their nutritional business, which is really important to us that they succeed and grow and prosper, which I've no doubt they will. But, we are a key investor there. We're the biggest investor by a mile. We will retain 3 to 6 directors on the company. So their success is really paramount to us. But also allows us, I think it's the natural home of the dairy business is with us, with farmers. So it allows us to focus on you, our farmers, our farm families, rural economies, and maximising the amount of money we can put back into your pockets. So I'd like to stress also, the relationships with Glanbia Co-op and Glanbia PLC are really strong. That's something that's really important to me as chairman, and it's really important to Donard Gaynor as chairman of the PLC also. Because, they are a very important customer of ours. I've no doubt we will work closely, and even into the future, we'll still work closely. The relationships are strong, and who knows what we could do, together in future years. I think, as you said, Siobhan retired last week as CEO of Glanbia Co-op after 30 years service, she's, as CEO, or CFO and CEO. It's a huge contribution, generated huge wealth for our farmers, but brought in a strong culture, brought in values, brought in a can-do attitude, brought in confidence. She's given us so much, and I just at this point actually like to say thank you, Siobhan, for that. But look, when somebody steps out, somebody else has to step up, and I have to say, as a board, we're absolutely delighted to have a man of Jim Bergen's calibre, Jim Bergen's passion, and Jim Bergen's ambition for family farms to take over the job as CEO. So looking forward to taking your questions at the end of the presentations, and at this stage, maybe I'd like to hand you over to our new CEO, Jim. Over to you.
Very good. Thank you, Chairman, and good morning, everybody. And it's my pleasure to address you for the first time as the new CEO of Glanbia Co-op. It's a very exciting role at a very exciting time. So I look forward to plenty of engagement and to meet you all when we can in whatever form. So I'm going to walk you through a presentation to explain more about the transaction and to perhaps set a context for that. So the sections in my presentation, we're going to look at the background to Glanbia a little bit and our heritage, the details of the proposals then, including the investment fund and the spin-out. We'll remind ourselves of what is contained within Glanbia Ireland. Then I will hand over to David from KPMG to go through the details of the transaction. And David will be followed by Sean, who will go through the strategic rationale. And then we look forward to a vibrant exchange of views. So firstly, if we remind ourselves of our 100-year heritage, and I think that Glanbia, from the point of view of external observers, has been acknowledged as an organisation that has evolved astutely over its history for the issues emerging at the time. And certain examples of that would be in 1988, when at the time we were 4 years into the quota era, and when interest rates were about 14%, both Avonmore Co-op and Waterford Co-op became PLCs. And they raised money on the stock exchange at that time and had ambition for growth. And ultimately, the value of our co-op today of 1.7 billion is a result of the ambitious decisions and the courageous decisions that were taken at that time. We then move on to 2012, when again we were 3 years before the abolition of milk quota, when our farmers, after 31 years of stagnation, were going to have the opportunity to realise their full potential. And the organisation again established the joint venture Glanbia Ingredients Ireland. And since then, Glanbia Ingredients Ireland has invested 343 million in capacity expansion on your behalf, and has enabled you to grow by about 70%, which is probably more than any other organisation in the world. And well done to you. As a result of that, we have a very strong business today. It has a 2 billion revenue, and it has a very, very strong balance sheet despite those great investments. So now we're at a new point when we expect that the next decade will be defined by sustainability and a focus on value add. And therefore, what better form of an organisation than a wholly owned co-op to support our farmers through this decade and to take the opportunities and to deal with the challenges that the whole sustainability agenda will present. And then in terms of comparators and how we see ourselves, we remind ourselves that some of the leading dairy processors in the world are great co-ops. We have examples here of Fonterra, of Dairy Farmers of America, Friesland Campina in the Netherlands, and Arla in Denmark. We compare ourselves with these. We learn from some of the good things they have done. But very interestingly, from one of those organisations, we had a visit about 3 years ago to understand how we could support our farmers' growth and at the same time retain a strong business and a strong balance sheet. So maybe sometimes we get things right also. And if I go through the details of the proposals, then there are 3 significant elements. The first element is to acquire the 40% of the shares of Glanbia Ireland from the PLC. The second element is to create a 68 million investment fund. And the third element is to reward our shareholders by transferring a volume of shares to our co-op shareholders in the form of a PLC spin-out. So if we look at the first item here, our objective is to create a 100% farmer-owned and controlled cooperative. we would remain the largest investor in Glanbia PLC, and the transaction would be funded through a combination of borrowing and PLC share sale. For the second element, the creation of the investment fund, this fund would be funded through the placement of 12 million PLC shares when required. The funds would be available for the acquisition of new businesses, and our objective here would be to return higher rewards to our members. And the third element then, as I said, is to transfer some value out to our shareholders. The projected value is 168 million, and through the spin-out, the average transfer of value to our members would be just over 11,000 euros. And to summarise then the movement in the shareholding in Glanbia PLC. So the co-op today has 32.4% shareholding in the PLC. And after the transaction, which involves two items, the purchase of the 40% stake in Glanbia Ireland and the spin-out of 12 million shares, the shareholding would reduce from 32.4% to 24%. And then, perhaps through the gradual use of the investment fund, only when required, the shareholding could reduce from 24% down to 20%. And in addition, the co-op would retain the 3% contingency fund that we always have had, and that's really there for technical reasons. And I would remind you that through history, that 3% has never been spent. And just a little more detail then on the spin-out. So I'm going to take an example here of a shareholder with 1,000 co-op shares. So in this situation, the shareholder would have 85 co-op shares cancelled and replaced with 321 PLC shares. These shares would be worth 4,488 euros based on a share price of 13.98 euros. And the co-op shareholder would retain 915 co-op shares. Very important to say that there is no change in the relative shareholding by each shareholder, as everybody's shareholding would be reduced in proportion. And if I move on to the investment fund then, as the chairman said, the investment fund is a statement of ambition, really. We are moving into a new era where there are new trends and a new economy developing through the whole focus on climate change and sustainability. So the intention would be that outline planning permission would be given to the board by you the shareholders, to use up to 12 million shares in Glanbia PLC should the right opportunities present themselves. And again, to remind you that these shares would not be sold until they were required and would continue to earn dividends from the PLC in the meantime. The first characteristic of the investment fund would be in relation to returns. We recognise the returns today, the very good returns from the PLC. So new opportunities would have to meet those types of hurdles and perhaps present opportunities to support our farmers as well. And these returns would be there with the aim of creating new value for all our co-op members. In relation to governance, the chairman rightly said that we have very, very strong governance and very strong financial disciplines within Glanbia. It's one of the things that we always have been acknowledged for. In this case, we have a strategy subcommittee of the board. The strategy subcommittee would review the investment opportunities and also set the performance criteria for these investments. And it's also very important to note that Glanbia Ireland itself is independently funded. So it's not envisaged that this investment fund would be used in relation to the ongoing needs of Glanbia Ireland. It really provides the opportunity for us to continue to diversify. So today we have two significant investments. One is that we are the largest investor in Glanbia PLC, and secondly, we have 100% ownership, or would have 100% ownership of Glanbia Ireland. But, you know, we have to be courageous and we have to be ambitious. And really what this is effectively a small start on what could be an incredible journey for the future. And it gives us the opportunity to perhaps participate in the new economies that are developing and perhaps sow the seed of what will be another great business in the future. And finally then, in terms of options today, we are open-minded on what these options may be. We will do a lot of strategy work and do a lot of analysis. And these opportunities may be inside or outside our current areas of focus. But one thing that we can assure you of is that they will be subject to strict due diligence and investment hurdle rates. And overall, as I said, we do have strong disciplines, strong financial disciplines within Glanbia, and they have stood us in good stead over many years. So just to remind you then of the business that this transaction is focused on. So in terms of Glanbia Ireland, we are the #1 dairy processing company in Ireland. Currently, we have probably 36 to 37% of the milk pool. We have invested in great assets in Bellevue, which was brand new. We acquired Wexford Creamery, and the Wexford farmers should be very proud of that creamery. And this year we expect perhaps to manufacture up to 50,000 tonnes of cheese within the creamery. We have our Virginia plant and our Ballyragget plants that have been invested in heavily and have been expanded also during the post-quota era. We do have award-winning brands, and the Avonmore brand is a household name in Ireland and indeed is making its mark in China. We export to over 80 countries today. We have some great and long-term relationships with the infant formula industry and also partnering some of the world's leading food brands. I'm delighted to say that Diageo, who own Bailey's, recognized the organization as their #1 quality supplier for the past 12 months. And that is an incredible achievement by our team, but also by our farmers who supply us our quality milk and cream. We are focused on advanced proteins. We did invest in a consumer mill in Portlaoise and are building plant-based technologies, very small in the overall scheme, but at the same time a new area for us, and over 40% of our grain today it goes into premium contracts. Through the past year we developed our sustainability strategy, which we've called Living Proof. And we're very pleased that so far that strategy is in line with government policy. And we'll see how all of that plays out, but a very comprehensive strategy there where we can work with our farmer suppliers and indeed with our customers. And then I suppose it's very important to say that we are hugely aware at all times of the impact that we have on our 6,000 family farms and on the rural economy. You know, and we feel that without agriculture in the rural economy, Ireland would be a very different place. And very quickly then, to remind you of the facilities that we have and the brands that we have. So we have 11 processing facilities, which are marked on the map, in addition to 52 retail outlets, predominantly in the east and southeast of Ireland. Some of our brands that you may not be as well aware of would be the Millac brand, which is manufactured in Virginia and in Bellevue. That is one of the leading enriched milk powder brands in the Middle East and in Africa. Also, I would highlight Lochagish facility, which produces Avonmore UHT milks and creams that are gaining traction in China and Vietnam in particular, and will have doubled in value in the past year. We also have our Truly grass-fed range. A lot of focus on the brand, but that is both a consumer brand and an ingredient brand, and is doing very well overall with a combination of those two channels in the US. I would also mention the Wexford brand and the scale of Wexford Creamery now, and there's even some Wexford cheese sold in the US and has been there for many, many years. And we have our soup brand, Avonmore Soup, which is produced at our facility in Kilkenny. So that's just a quick reminder of our brand family, and then to reassure you that we have invested heavily and are building capability within our business. So we're driving our value-added milks, and you can see those in the top left-hand corner of your screen, and in particular a new product there called Pro Oats, which we've launched in the last couple of weeks, which is a combination of protein milk and oats. So hopefully that will go very well. You also see our Asian team led by Raymond Lee, who are driving our UHT products in particular, and indeed powder in pouches under the Avonmore brand in China. We've focused on premium grains over many years, and I think are recognised by our farmers now for having created more value than anybody else for our raw grain supplies. In recent weeks, we have taken possession of our new R&D facility in Ballyragget. We invested 15 million. Very proud to have 53 technologists employed there, and we look forward to lots of good ideas and new products coming from our R&D centre. And finally then, we are investing and have invested in our digital journey. So we have mymilkman.ie today, we have Glanbia Connect, and we have Glanbia Direct. But these are the start of what will be the new way of doing business in the future. The digital economy is growing at a pace, and we're on the game and investing and building our capabilities. And just back to the financials then, to remind you that the revenues of this business were 2 billion euros in 2020, will probably be 2.2 billion in 2021. Our EBITDA, our generation of cash, was 123 million in 2020, will be closer to 140 million in 2021. And in 2021, we project that we will have paid 1.3 billion to our family farmers for milk and grain, which is an enormous contribution and impact on the rural economy. And as we said earlier, the chairman said, we have invested a total of 559 million in our facilities, both for renewal and expansion since 2012. And we have enabled our farmers to grow by about 70% during that period. So we would suggest that this is a great success story through that era. And really now what we're doing is transitioning our organisation to be fit for the new era that we are facing into now. So at this point, I'll hand over to David. I will man the slides, and I'll hand over to David and enable David to go through the transaction in some more detail for you.
Great, thank you, Jim. Hello, everybody. I do hope at some stage we're able to meet in person, but it is my pleasure to present to you today. So David O'Kelly is my name. I am a partner in KPMG and the head of acquisitions. For those of you who aren't familiar with KPMG, we are Ireland's leading professional services firm. We employ over 3,500 people in Ireland, and we advise on more transactions than anybody else. What I'd like to do is take a few moments to give you my perspective. My perspective that this is a great deal for farmers that will enable greater support. It's also a great deal for GI, and will help GI invest and to meet its full potential. I've led the team advising on strategy and subsequently this transaction. That role arose out of a competitive process. We tendered to work with the board, your board, over the summer. And as the chairman referred, one of the reasons we were appointed is that we bring a fresh perspective. I'd no history with either the co-op or the PLC, and I gave my commitment to the board that we'd apply that fresh perspective and give objective advice throughout the transaction, and I believe we've done that. So the first step was to review strategy. An initial significant focus of that was around the ownership of GI, the 60-40 split. Having done our work, we concluded that acquiring the 40% was the right outcome. It's the best outcome for co-op and farmers. The current deal has served well, but it lacks flexibility. And both the co-op and its members and GI need flexibility to take full advantage of all the opportunities that are ahead. I firmly believe that GI is best suited to have one shareholder and one strategy. I'm going to talk through the numbers in a moment, but before I do that, I want to say that I'm very proud to be involved here. I realise the significance of a member organisation and all of the very, very positive impact that Glanbia Co-op has in the rural community. And it's been an absolute privilege to work with the board and the GI team on this. So we can flick on to the next slide, Jim. You'll have seen media commentary on the deal and the various announcements, and I just wanted to summarise and maybe provide a clear perspective on that. So the 307 million is the announced deal for the PLC. The effective number for the co-op is 286 million. The difference between the two are effectively the 17 million of dividends and distributions that would have contractually gone to the PLC but will not be paid across. And then a 4 million new contribution to transformation costs. The eagle-eyed amongst you may have spotted the PLC reference to an 8 million number. So half of that 8 million was related to pension contributions that come from a previous deal of the 4 million at the bottom of the page there, and the 4 million, the new 4 million related to transformation costs. So the number you need to have in your mind is 286 million. Now, there was a lot taken into account in terms of getting to a negotiated deal, and the negotiations were very, very tough. Good, I would say, recognizing the good relationship, but people knew that this is real money, and the number mattered. We had done very thorough analysis that we presented to the board, and there are attributes that were taken into account that members should be aware formed a part of the final negotiated price. I'd say at almost every board discussion, we talked about milk support and the impact that had on valuation. And I'd say that the board really held our feet to the fire that was reflected in the final price, and it was. The GI has a pensions liability, and that also featured in the negotiations, and that liability was a deduction in the valuation. There's debt. GI has debt, both on-balance sheet debt and off-balance sheet debt, and both of those types of debt were also incorporated. You'll also have seen comment around shareholder debt. That's legally contracted debt that GI has that it will have to repay. And what we're able to do is give GI the flexibility to have a year to find sources to repay that 28 million of shareholder debt. Other elements that came into consideration in the negotiation was the level of CapEx and also the sustainability. So the net point was getting to a deal that's 9.2 times current year profits. And to give some perspective, that falls into the lower half of our benchmark companies. Now, 286 million is a big number. It certainly is. But I think members need to bear in mind that your GI, which hopefully will end up owned by your co-op, is a business this year that will make almost 3 million euros of profits a week. So it's a very, very substantial and a valuable business. Thank you very much for your time listening to me, and I'm very happy to address any questions you might have afterwards. I'll hand over to Sean.
Thank you, David, and good afternoon. I'm just going to cover a few slides that will set out the strategic rationale in summary for this transaction, and then I'll conclude with a summary to bring the proposition together. So first of all, to look at the strategic rationale, and this can be summarised under 4 headings. First of all, the heading of farmer ownership, both as our chairman and our CEO have outlined. This transaction will result in 100% of what are world-class processing assets remaining in the hands of our farmers should you approve this transactions. And these assets are highly invested. As Jim has suggested, over the last decade, something close to 560 million invested in these assets. The second strategic and strong strategic rationale revolves around price. It's fair to say that dear to the hearts of our farmers is the returns that they will achieve for their milk and their grain that are sold to this organisation. And in that context, the rationale here is that our board and our management are committed to deliver the best possible milk and grain prices for our farm families as a consequence of this transaction. A further rationale revolves around the financial strength. This Glanbia Ireland is a financially strong organisation, well invested and run to very stringent financial disciplines. This is the organisation you will be taking ownership post the transaction. But in addition to that, the co-op will remain the largest investor in Glanbia plc once the transaction is completed. And finally, in terms of strategic action rationale, there's the argument of flexibility. We are creating an organisation that has the flexibility to support our members, to pursue new opportunities as set out by Jim and our chairman, and in addition, they are to focus on the addition of value to your milk and grain. So there's a strong rationale for the support of this proposal. But to focus a little bit perhaps on the arguments that are very close to our farmers, particularly our dairy farmers, and that is the question about what this transaction will do in terms of its impact on milk price. There are 3 very tangible outcomes of this transaction that will assist us in that regard. But before we look at them, I think it's worth considering something that's not tangible but is hugely important, and that is the culture that will be established as a result of this transaction. If we are successful, we will have established a business that has a focus and a clear mandate to deliver value for a singular shareholder. It will be an organisation where all of the 2,000 or so employees will be focused on a singular purpose: to deliver value for your milk, for your grain, to ensure that the inputs we provide to you on your farm are delivered in the most competitive fashion, and to ensure that we deliver services with excellence to your farm. This is the culture that will be established and will be the key focus of the organisation post the transaction. In terms, therefore, of very tangible items that will deliver on milk price. First of all, if the transaction is successful, the dividend that today goes to our PLC will now be available to the organisation in terms of how it pays for milk or grain. In addition to that, there will be significant flexibility in terms of our PAT. It is true to say that the 3.2% PAT target that we have within the organisation has served us very well since the establishment of Glanbia Ireland. It has ensured that we've been able to invest strongly in the company, run it to very strong financial disciplines, and grow that organisation to the business that it is today. However, we're also aware that on occasion it has been something of a controversy, leaving us in a position that on occasion where we would like to have more flexibility to respond to dynamics within the market, we didn't have that flexibility. Post this transaction, there will be no PAT target, and therefore that flexibility will now be open to our board and to our organisation to respond as required in the years ahead. However, it's important to say that the organisation will still run to very strong financial disciplines that has served us well to date. And finally, and very excitingly, as our Chairman and our CEO have pointed out, there is the opportunity into the future that we will be able to develop new revenue streams through the successful investment projects that we invest in. And these will create additional streams of income available for our shareholders. So it's fair to say that this transaction has the capacity to allow us to have a very positive impact on milk price and indeed on grain price. There are, Chairman, a number of other items just worth noting as part of the transaction. First of all, in terms of the board, it is proposed that as a result of this transaction, there will be established a singular board who will oversee the governance of the organisation, the creation and the execution of the business strategy for the new company. Today, we have a number of commercial agreements with our PLC colleagues that were negotiated as part of the previous transaction. Into the future, if we are successful on this transaction, the PLC will remain and continue an important and valued customer of Glanbia Ireland. However, it is, out of this transaction, clear that there will be no encumbrance or limitations in terms of the products that the new company can go to market with, or indeed the markets which we can service. As part of the previous transaction, it was agreed, if a proposal of this nature were to go to our farmers and be supported, then the identity, the Glanbia identity, would remain with the PLC. The sensible reasoning behind that agreement was based on the premise that the PLC is a listed company, and therefore in that context the name is an important identity to that organisation. We have commenced a process to identify a new name for the organisation should we be successful, and that new name will come into place after a transition period which can be up to 12 months from the point of execution. And finally, in terms of the elements of the transaction, Chairman, we have agreements that for the next 3 years, the PLC will continue to provide service and IT and service provisions to the new organisation. And indeed, it's also agreed that post that, if both parties agree, those services can continue to be provided to the new organisation. All of these proposals are subject to member approval at an SGM. No doubt Pat will pick this up later, but it is targeted at this point in time that that SGM will occur sometime towards the middle of December. Chairman, I might conclude with this slide. It is said that there is a time for everything and a season for every purpose. With this proposal, we stand now at the dawn of an exciting frontier, the timing and rationale for which are compelling. If our farmers approve this transaction, and many of our farmers will be sitting today in their kitchens having milked their cows this morning, listen to this, or perhaps they're out on mobile devices feeding cattle in shed, or even on this beautiful mild November morning out watching the cattle graze or herding in the fields. If you, our farmers, support this proposal, you will be taking ownership, 100% control and ownership of a world-class processing facilities that is closest to your business. You will be helping us ensure that we establish one of Europe's leading co-ops, with greater flexibility to support our farmers, and indeed with this investment fund that our chairman has spoken to, the opportunity to redefine the very essence of a co-op into the future. You will immediately benefit through a direct spin-out of shares to our members valued close to 170 million. We will have the capability and the ambition to pay the best possible price for milk and grain as a result of this proposal. And finally, Chairman, it is agreed that post this transaction, you will still remain the largest investor in Glanbia plc, which will be focused on growing as a global nutrition company to the benefit of all of our shareholders. With that, Chairman, I'll hand back to yourself.
Okay, thanks, Sean, and indeed Jim, and then David. And look, I just say, pick you up there at the dawn of an exciting frontier, and I think you describe elegantly where we're hoping to go. And I can assure you the board feel now is the time now to turn the page into a new chapter on our continuously evolving journey in Glanbia Cooperative Society. We see this new chapter as one full of opportunity, of growth and ambition. And a growth and ambition for you, our family farms. Our board unanimously support these proposals and are committed and ready, to take our company to the next level. I think opportunity is there, and I think ambition, are synonymous with Glanbia. We're doing this. This is all about you, our family farms. We want to deliver the maximum price back to you, the maximum dividend back to you, and create the maximum wealth back to you. This is what these proposals are for at its simplest. So look, at this stage, maybe I'll hand you back to Pat, and maybe we could take a few questions.
Yeah, thank you, Chairman. Look, it's now 12:15, just to confirm we're live. And for those of you late logging in, just our panel is John Murphy, our chairman, David O'Kelly from KPMG, Jim Bergen, the recently appointed CEO of Glanbia Co-op, and Sean Malloy, Chief Growth Officer in Glanbia Agribusiness. Online we have David Fitzgibbon, who's from the legal firm Mathesons, who's the Glanbia Co-op legal advisor, and we have Michael Horn, Glanbia Group Secretary. And for the next period, we're going to take your questions. A number of them have come in by email and text already, and on your screen now, hopefully you can see the hello@glanbiaconnect.com, and then the phone number is 086 180 3947. I've received a number of them already, and I'm going to go straight into them and start firing them to my left and to my right. I've asked the panel to keep their answers brief, so we'll get through as many as possible. And obviously you can keep sending them in, we'll get to them as many as possible. So Jim, I'm going to go first to you. And a number of questions have come in on the investment fund, and a little bit of concern in the questions about the governance of it and what areas you're going to invest in. I know you covered it in the slide, but maybe you might just come back to that specific question around how will the decisions be made on what to invest in and what not to invest in?
Sure. Thank you for the question. So I think the envisaged structure of the organisation is quite important here, and there are two major activities within the organisation. One is the operation side, which encapsulates really Glanbia Ireland, a 2 billion organisation, and then on the investment side we have the PLC share investment, which after this would be worth about 1 billion, and we have the dividends from the PLC, and we have the investment fund. So very separate focus. First of all, we do have a subcommittee of the board which is focused on strategy. Our job as management is to get the best advice we can on opportunities, to identify those opportunities, to submit them to the subcommittee. The subcommittee will have quite rigid standards for the investment and would ultimately recommend them to the board. That is completely separate from the operation of Glanbia Ireland. So, we have heard perhaps some comments like this would be used to support milk price. It would be used to invest in projects within Glanbia Ireland, and I can assure you that is not the case. What we are trying to do here is set a new ambitious roadmap for some diversification of the investments that we already have. And they could be anything, in relation to the new green agenda. Lots of new opportunities emerging there, perhaps with government support. They could be supportive of our farmers, and they could be high returning. So there's, one set of opportunities. Other opportunities are the new trends in markets today. So for us, we have a very, very substantial dairy base. Plant base is growing. It's small in our context, but we could take the opportunity to accelerate some of the higher end products that we have and higher end market channels through acquisition as well, and give high returns from those, but build on some great work that's already done. So they're just some examples, Pat, but the governance around this will be very, very strict.
And a related question, Jim, that came in was, will the governance of the board change given this potential new direction and a lack of expertise on the board with the inclusion of non-farming directors. So the governance, and maybe the chairman can comment on it as well, but the governance and the directors, obviously the PLC directors will now, if the transaction is approved, they would come off. So are they going to be replaced by non-farmer directors?
Yes, and the chairman might want to comment on this, but I suppose to explain today, we have two boards. So there's the board of the co-op, which is the holding company, and then we have the board of Glanbia Ireland, and the board of Glanbia Ireland has 23 people on it, and 6 of them are PLC representatives. So if the transaction is approved, the 6 PLC representatives would withdraw, and the board, the members of the other members of the board of Glanbia Ireland would be subsumed into the board of the co-op, and there will be one single board in future overseeing the 2 activities that I mentioned, the investment activity and the operations division, if we want to call it that.
Yeah, and just to add to that, Jim, I suppose the key thing for me as chairman, is the management team we've had over the past few years that have managed this business. They will be the same management team managing out into the future. But yes, obviously we will be, taking on some outside perspectives, to complement the skill sets that the current board have, and we will be looking to get some independent independent non-executive directors, with skill sets, maybe around M&A or someone in brands, international trade, whatever. So absolutely, we'll strengthen the board with some independent directors.
Okay, thank you, Chairman. David O'Kelly, I think this one is for you. It comes in from Brian. Why is the €4 million transformation cost taken off the purchase price when this is an actual true cost? So you mentioned a reference to the 4 million being taken off. So you might explain that, please.
Sure, and thanks, Brian. I suppose the reason we take it off is that had we not negotiated that, the co-op would have had those, or GI would have had those costs in any event. So it was a contribution that wouldn't otherwise have been received. So it's a deal benefit.
Okay. And on that related point, maybe Jim, to you, there's a number of questions about the name and why the co-op couldn't keep the Glanbia name and it has to go with the PLC. So in other words, why not keep the Glanbia name? Why change?
Yeah, so I suppose the technical reason is that Glanbia PLC owns the name. So it's their decision as to whether they keep it or not. And obviously, given their position on the stock exchange, they would prefer to keep it, and because they are known, and it could affect their value, for example, if they change to another name. So that was their decision. For us, we have, I suppose, mixed feelings about it. We have a lot of loyalty to it, particularly in Ireland, to the Glanbia name. But interestingly enough, our commercial team often have to explain that they are different to Glanbia PLC. Because we could be going into similar customers, and the new name provides the opportunity for us now to differentiate ourselves from the PLC, but also at this point in our history, it's a great opportunity for us to capture what is great about our business, about the community aspect, the family farm aspect, the greenness of Ireland, the outstanding agricultural country that it is, and renew that relevance as we go into a whole new world of I suppose, environmental awareness, social awareness, and governance awareness. So I see it as a great opportunity, but unfortunately we couldn't keep the Glanbia name.
Okay. Sean Malloy, the question just came in 2 minutes ago. Where will agribusiness fit into the new plan?
Thank you, Pat. So agribusiness is obviously a critical component of the current organisation, and it will continue to work to stay within that operation activity where it resides today, and hopefully continue to grow and develop its offerings for our farm members, Pat.
Okay, Michael Horn, can you hear us okay online? Michael Horn, just confirming you can hear us, because I have a question.
I can hear you, Pat, yeah.
Okay, so with the 85 shares that are to be cancelled, will that affect my standing as I was required to have a set number of shares to become a supplier?
So that's something that the Co-op board will have to look at in due course. It has arisen in the past when there has been share cancellation exercises. The minimum requirements for shareholding would get reviewed in that context. So I think it's reasonable to assume that will be adjusted to reflect the cancellation of shares in the correct proportion. We don't know what the final number is yet. 85 was the number used in the example for this meeting, but until we get to the actual cancellation, that number will move around a bit. But I think it's reasonable to expect the shareholding requirements will adjust accordingly.
And another question, Michael, while we have you. Since the announcement, Sylvester Burke says, since the announcement, the PLC share price has weakened considerably. Does this mean bad news or for the deal, or is it perceived badly by the market? What's the share price movement being explained by?
Well, good question. I suppose in terms of, at this time of the year, stock markets generally and share prices can be volatile. There are current investor concerns from a macroeconomic perspective related to COVID-related issues, supply chain concerns, which we've all been hearing about, and inflationary pressures in general. So they are some of the macro-specific factors impacting on stock markets at the moment. Specifically to Glanbia, there will be some investor concerns regarding the intention to sell 4%, 12 million shares to in part fund the transaction to acquire the 40% interest in Glanbia Ireland. So that would be, in technical terms, that would be considered an overhang on the share price. So that will have a drag effect to some extent. So they're the main reasons, combination of macro factors and then a Glanbia specific factor. But important also just mention, when I have the opportunity, Pat, PLC last week issued its Q3 update to the market. PLC is guiding a very strong year for 2021. It will be at the upper end of its guidance of between 17 and 21% growth in earnings. So underlying business performing very strongly.
And just while we have you, Michael, one came in. When will the new spin-out be completed, or when, if it's approved, when will the spin-out be completed, and what are the remaining shares worth?
The remaining shares in the co-op or in the PLC patches?
It's not clear, so I'm assuming in terms of what would the co-op hold post the spin-out, and Jim referred to thresholds moving down. Okay.
So the first part of that question, it is a lengthy process to complete a spin-out. We've done them successfully in 2013, 15 and 17, so they do take time. There is quite a strong process, detailed process involved, so we will wait for the approvals to come through in due course before we would commence that process, because that would be the appropriate thing to do. We do need to seek revenue approval for each spin-out, and that does take time. So at this stage, based on expected approvals for the transaction, should they come through, we'll be looking at a spin-out probably in June, July of next year, being completed fully at that stage. When the spin-out is finished and the transaction completes, the co-op will be holding at that stage 69.1 million shares, 24%, as was mentioned in the presentation earlier. And at today's share price, that's about just under 900 million euros of value.
Okay, thank you, Michael. And look, obviously, people can text or email in further questions on that area if they wish. Michael is on the line, and also David Fitzgibbon, our legal advisor. The next one is for the chairman. How can the 6 directors on both the PLC and co-op boards be independently acting for either side? How is there not a conflict of interest here? So the 6 directors that are on both the co-op and PLC board in terms of this transaction for the discussions related to it, how is there not a conflict of interest?
Oh yeah, well, obviously, Pat, the 6 co-op directors have stepped back from the PLC board for any discussion along this transaction. We haven't been involved in any way. So those discussions usually took place after our regular board meetings or outside our regular board meetings, but we've had no input whatsoever to the PLC side. Just as Siobhan has stepped back from the co-op, we've stepped back from the PLC for this process.
Okay, thank you, Chairman. Jim, over to you. Can you elaborate more on what you mean by best possible price? Thanks.
Yeah, I'm sure this wording will get plenty of debate out in the country. I suppose people would like to see some kind of formula or commitment, and I think everybody involved in business will respect that we're paying out 1.3 billion, and that milk price and dairy markets are variable. It's as simple as that. So we're not really in a position to make a hard and fast commitment that would hostage a business on your behalf in any way as we go forward. But it is very important to say that there is a change here. First of all, there is a change in ethos. So everything that we do in the future will be focused on one shareholder, our farm families. And the objective there is to manage the finances of the business very, very strongly and in a disciplined fashion, but then ensure that we are creating as much value as possible and transferring as much value as possible to our shareholders. So our commitment is to pay the best possible milk price. We genuinely mean that. It is a change, as I said, and I suppose time will prove, whether we have done that or not. But that's all I think we would say on the matter now.
Yeah, maybe just add to that, Jim. I suppose look at when we started this strategic review back last April. Let's be honest, it was all about milk price. It was all about grain price. That's why we're actually doing this entire transaction. We want to return the strongest price possible to our members, and use some of our wealth, in a better way. In the past, we have a lot of wealth tied up, but we want to gain some new income streams as well. So this entire project really is about maximising returns to family farms. So I agree with Jim, it's the strongest price possible, but we're not going to tie ourselves down in some formula or other, but we are ambitious and our board are ambitious to pay the strongest price possible.
Okay, I'm going to go to David O'Kelly for the next one, and it comes in from Vincent Gahan. Vincent is in our North Wexford region, and David, Vincent says, the biggest question here is the valuation, and that hasn't been answered. Why are we paying 286 million for what costs us 12 to 14 million a year? In other words, the dividend, 12 to 14 million a year. That is a multiple of 22 and not 9.2 according to KPMG. Secondly, what can we do next year that we couldn't do last year? So maybe that, Jim, the second part of the question might be to you. So the biggest question here is the valuation, and that hasn't been answered. Why are we paying 286 million for what costs us 12 to 14 million a year? That's and then explain the multiple, and then what can we do next year we couldn't do last year? And then, Chairman, the latter part of the question, what is Vincent's asking? What is the urgency? Farmers deserve the opportunity to discuss this face to face with the board and Glanbia personnel. So, David, valuation, please.
Sure. And Vincent, thank you for your question. So the 12 to 14 million referred to there is the historic dividend. As a 40% shareholder, the POC is not only entitled to the historic dividend, but there's this profit retained in the business that continues to grow the value of the business. So you could possibly look at the dividend as a funding cost of that, rather than actually their economic value. Their economic value is with respect to the profit, and that's what we're using the multiple against.
Before maybe I move across to Jim, there's a related one actually. Is with the fact that 3.2% is going, how is it reasonable to value GI on 9.2 times earnings?
The 3.2% going is a feature of the transaction. That's governed by a shareholders agreement, which only goes once the transaction is effected.
Jim, what can we do next year that we couldn't do last year? If members approve this transaction, what will be different from Vincent's question? What can we do next year we couldn't do last year?
Yeah, so Vincent, I think the important thing here is that there's a constant build and a constant investment in the business. So we're building on great work that has been done over the last number of years. That's one part of it. I'll come back to that. But there is a technical change here in how we are measuring ourselves for the future. So we said strong financial disciplines, and that will not change. But the 3.2% PAT target will disappear. We will operate our business in relation to our bank covenants and ensure that we have plenty of cash to run the business. And we don't have necessarily a fixed profit target. So therefore, we will be paying more out to our milk suppliers and to our grain suppliers. That's our objective. And even in doing all that, the net retained profit in the business will remain the same. So there is that change, which is signalling a change of ethos, which is absolutely appropriate to the running of a pure co-op. So that's a significant change. In addition to that, we have been investing in value add. We have gained margin in the current year on that, and we hope and intend and have a strategy that builds on that incrementally over the next number of years. Also, we did announce a significant cost reduction program, particularly in our consumer business, and that is ongoing at the moment, and there will be benefits. We're investing in that, and there will be benefits in that from that business over the coming years as well. So setting ourselves up, but constantly building, for better performance, now with a single shareholder, family farms.
On the urgency, Vincent, there is no urgency. We've been working, I suppose, for the last 9 years on this, when we bought back the 60 in 2012 and the 60 in 2017. This day, as I said earlier, was always going to come. And the board feel that now is the right time to execute this transaction. And I appreciate we're in a difficult time with COVID, but as chairman, I'm committed that we answer every question that will be asked in the coming weeks. We weren't expecting to be where we are now. We really want to get out there to meet the farmers. That's what we want to do. I think Sean, Jim, I speak for us all, David, we want to get out because we have a really ambitious and a really strong and a great story to tell. So we're living in a Zoom world. As I heard somebody on the radio yesterday, nobody knew what Zoom was 2 years ago. But at this stage, I think we're all very, aware of it. We're all buying cattle and selling in the mart. The whole world has moved. We can get this message through, in the Zoom world. But if there's any relaxations and if things allow in the next coming weeks, we'll certainly be out there to meet you face to face. But look, the timing is right. The board are fully convinced this is the right time. I think there's never a wrong time to do the right thing, but we believe this is the right time and there's absolutely no urgency. We'll give this all the time it needs, and as chairman, I commit all questions will be answered.
Yeah, and look, if you want to send in questions right now, it's hello@glanbiaconnect.com and a text message 086 180 3947. One that came in 12:15 was, why do we need the investment fund right now? PLC share price is low, so why not hold off until it's needed, Jim? And so in other words, is the investment fund going to be activated if the shareholders approve it? Why do we need it right now? Why not hold off until it's needed?
No, and I think that's the point, that really all that's being requested here is outline planning permission. We're not in a position, we don't have a target today for that investment fund. Somebody referred to capability. We have a level of capability and we have to build more capability to review and find those investments. So this is going to take us some time. As I said, all it is outline planning permission, and sometime in the future we may execute the fund once we identify the proper targets. And obviously the share price would be a factor within that at the time.
Okay. Jim, again, I think this is yours. What is the position of the Glanbia Luprino joint venture in Portlaoise in relation to the new proposals?
Yeah, so the Glanbia Cheese Europe, which that business is called, is part of a joint venture between Luprino and Glanbia PLC. So there's no corporate link between Glanbia Co-op or Glanbia Ireland with that business. So it remains independent of Glanbia Co-op, Glanbia Ireland. Very important to say that it's a great customer of ours, and we've worked very, very closely with them for the past year to help them commission the plant and to develop the raw materials that they can use in that facility. So we're looking forward to a big year of sales in there, which is a great Brexit diversification opportunity.
Okay, and Jim, you mentioned something there that actually has come in from a few different people. I'm just trying to find the specific questions here, but basically the current relationships with the PLC, commercial ones, and post, if the transaction is improved, what changes, and do we lose a good market for specific products like whey? Can they buy off other people? Can we compete with them? What changes?
Yeah, so very importantly, they're a great customer and have been, and they're the biggest buyers and the biggest sellers of whey protein isolate in the world, and they have the biggest brand family of performance nutrition products in the world. So they're a great customer for whey protein isolate, for MPCs, milk protein concentrates, and also for acid casein. And, in the conversations, which have been very, very tough in negotiation, no doubt about that, but a willingness on both sides and a goodwill on both sides to build commercial relations going forward. So hopefully very little will change on the commercial front. But we also have to back ourselves, sell whey protein isolate into high value customers, build our own capabilities, and there are no restrictions on us now to do that. So from a commercial point of view, hopefully nothing will change, but we are unrestrained in terms of who we deal with in the future.
Okay, David Fitzgibbon, if I could go to you. Is an online meeting, SGM, permitted under Glanbia Co-op rules?
Yes, so at the moment, the government has put in place emergency legislation that allows the virtual general meeting. If we did not have that emergency legislation, the rules would not permit a virtual general meeting.
Okay. And then what levels of approvals are required to approve the various votes, and do milk suppliers have a specific vote within that?
Okay, so on a transaction vote approval, simple majority vote of voting members. On rule changes, it's 2/3 of voting members. And where there's a change to Rule 4H, which is the shareholding in PLC, the active milk suppliers, they also have an additional vote on that, but that's 2/3 of active milk suppliers.
And when you talk about majority, is it majority of the 7,000 eligible shareholders, or of the ones who turn up and vote at the special general meeting?
It's the ones who actually vote, so it's the votes cast.
Okay. Jim, could you, from Monduff Farm, could you clarify what restrictions and products and markets will be placed on the new co-op? So what restrictions, you mentioned in terms of commercial arrangements, would there be restrictions as well in terms of what products and markets the co-op could or not go into?
No, there will be no restrictions going forward, none whatsoever. So we can continue to develop new products, market new products, sell new products of any type, anywhere in the world.
Okay, and will the new co-op be competing with the PLC for the same markets for their products? So,
yeah, the world is a big place, so I think that's the first piece here. And you know, there are growing markets. We are supplying Glanbia PLC today, who are supplying customers, and we will go out into the market. We will not necessarily target or to compete with Glanbia PLC, but we will go out to build markets ourselves, and we have some very significant capabilities, you know, in acid casein, in milk protein concentrates, and we can build, and in general whey, and we can build capability in whey protein isolate. So we will back ourselves, and we will go out into the markets and compete. But you know, Glanbia PLC is not a target for us in terms of that competition. The world is a big place, and there's significant growing trends for those products.
Okay, and Jim, another one for you again. Who will pay for the development at Bellevue?
So I assume this is the proposed cheese development, and that is the subject of a joint venture. So very same as we've had independent funding within Glanbia Ireland since 2012. The joint venture would receive a certain amount of an equity injection from Aware and from Glanbia, and then funding arrangements have already been put in place with banks to fund the building of the facility and the running of the business.
And the same person asks, how will milk price benefit apart from the 14 million not paid to the PLC? This only equates to less than half a cent per litre. Surely the remaining GI profit will still need to be maintained to run a steady business.
Yeah, so I think I probably touched on this a bit earlier. So the Speaker is correct. The PLC dividend would not be paid. The dividend structure that is there, in actual fact, will now probably end, and those monies will be retained within Glanbia Ireland as it is, or the operating division. So there's a bit more than what the Speaker said in relation to that. That's the technical change. But the rest of it then is building on the work that we're doing within the business and continuing to create more value, which ultimately now goes to one shareholder.
Okay, Michael Horn, if you can hear me, can a farmer take co-op shares rather than PLC shares in the spin-out?
Thanks, Pat. No, the spin-out is an exchange of co-op shares for PLC shares. It's a value-based transaction, so it's the way it works is you forfeit some co-op shares in order to be replaced with PLC shares of equivalent value. And that's the piece that then requires the revenue approval in advance to ensure that there's no CGT exposure on that spin-out for each individual member. So that's how it works. So there won't be an opportunity through the spin-out to acquire co-op shares.
Okay. Chairman, I think this one is probably best directed to you. Will the non-dairy shareholders suffer as a result of paying the top milk price?
Absolutely not. We're committed here to put our dairy farmers and to our grain farmers, and even indeed to our retired farmers. You know, they will benefit from a progressive dividend, and 10% of our M&A fund or investment fund, that's ring-fenced as well for further dividend on top of our regular dividend. So I think there's something here for everybody.
Sean, I'm going to put this one to you from Thomas. Thomas wants to know, regarding the new name, have you ideas of what the new name might be?
I have, Thomas. I'm not going to call them out on camera here today. There is a process started in that regard, and we've deployed the service of experts in that arena that are going to be working on the establishment of a new name. So it's a pretty detailed process that we're going through, and it's quite exciting to see some of the propositions that are being put forward out of that. So in due course, Pat, something will be unveiled in that context, and that will go to our shareholders then. And
a related question, how much will the rebranding and renaming cost, to change it, and how long would it take to put all the tankers, and, I presume it's a pretty substantial piece of work.
Yeah, it's a considerable piece of work both locally and internationally to do that, Pat. We have agreed as part of this process that there will be a duration of time post the transaction, something in the order of 12 months, to allow us to work through all of that. There will be a considerable cost involved in that. As it happens, Pat, as part of the shareholders' agreement, there is a quantum of money, 1.5 million, that the PLC have agreed to pay towards that cost. And in addition to that, there are funds available through this transaction to offset some of the costs involved there. So it will be a considerable exercise. It'll take some time, but it also presents a significant opportunity for a new start as well, Pat, and to establish ourselves with a new identity in the market once the cooperative is fully established.
Okay. Michael Horn, maybe you might be best placed to comment on this one. How many non-active shareholders are in the co-op at the moment? I might give you a moment to get your head around that one. How many non-active shareholders are in the co-op at the moment? Put you on the spot there.
Yeah. So I don't have the exact numbers, but order of magnitude is about 11,300 members in the co-op, and approximately 6,500 are deemed active in terms of how we categorise membership. So they're not exact numbers, but they're pretty close.
Okay, there's a large number of questions now just literally coming in as we speak, so I'm going to rattle through them. Sean, can we look forward to more competitive prices on the agri-trading side of things, keener input prices, competing better with rival and smaller competitors?
So, Pat, look, we have a very significant agribusiness managed by a team that have grown that significantly over the last 3 years, and that is going to continue, if not accelerate, if this proposal is concluded. We will continue to offer very competitively products to our farmers and to meet their demands. So the answer to your question is yes, we will continue and build on the competitive position that we have today.
Okay. This is great. When you start quoting from the meeting, it shows you're really live. Jim mentioned that the investment fund, you were looking for outline planning permission. This implies that you would come back to shareholders for full planning permission to spend the money, but I don't think that's what's going to happen. You might comment, Jim, on that.
I think that's correct. You have an elected board who are very ambitious and obviously manage the affairs of the organisation very, very tightly as well. We have an audit subcommittee and we have a strategy subcommittee. So I suppose we're asking our shareholders to trust that the board will do what they have done over many years and run the organisation sharply on your behalf.
Okay, and I'm not sure now if this one is for you, Jim, possibly is Thomas Quinn. 60% in 2017, 112 million euro. 40% in 2021, 286 million euro, over 4 times more expensive. Comment, please. Now, I think that's referring to the 2017 transaction on agri and consumer. So
that's correct, yeah.
60% in 2017 cost 112 million euro. The 40% this time is costing an effective 286. Explain.
That's correct. So I think that there's, part of that is that agri and consumer are, about 600 million of revenue out of 2 billion or 2.2 billion of revenue at this point. So yeah, you can work out the proportions for yourself within that. I think the other aspect here, Thomas, that's very important is that the business has been growing, and the business has been growing its profits, and it has been growing its assets over that time. And the biggest beneficiary of that during that period actually is the co-op. So now we think that 286 is fair for 40% of the total business, and that it represents a fair price at this point.
Okay. David, question to you maybe in terms of pensions and debt levels being taken on with the purchase. So were they factored in? Were total debt levels taken into account in the purchase price?
Short answer is yes, Pat. They were. So both pensions, on balance sheet debt, off balance sheet debt, and shareholder debt were all factored into the purchase price.
And is the co-op now taking on that debt?
No. So GI is a significant borrower. It's a large company. It's in very good. Has excellent relationships with banks. I've spoken with all the banks, but that debt remains within GI.
Chairman, if the co-op is going to be 100% farmer-owned, will 100% of profits be returned to farmers, shareholders between better prices and dividends, etc.? So will 100% of the profits be just paid out to farmers, shareholders in dividends and higher prices?
Yeah, look, as I say, owned, controlled and operated for the benefit of farmers, yes. So the profits will be going to farmers. Whatever profits we don't reinvest in the company will be going straight back to farmers, 100%, yes.
And Jim, related to that one in terms of what profit level would be required by the business. You mentioned strong financial discipline, and I think there has been a number of questions in the last week. We met with various people. A little bit of concern around, is strong financial discipline just going to disappear now in terms of the co-op governance?
Yeah, so I suppose this argument flips a bit. I've been acknowledged, I'd say, in many meetings with farmers down the years that we've been too tough on the financial side of it, and not tough and not I suppose sensitive enough to the needs of farmers. What I would hope people would understand is that we're not going to flip totally to a different type of organisation. We will run the business strongly. We will run as much. We will return as much as we possibly can to our farmers. In actual fact, in the model that we envisage here, the retained profit in the business would be similar to what it is now. But the important thing is that we don't have this rigid one number that we have to aim for every year. We will have a level of flexibility within that, which we think will be, I suppose, more sensitive to the needs of farmers at various points in the year.
Okay, I'm going to put out the last, it's 10 to 1 now, so I'm going to put out the last call for questions or comments if you want to fire them in. Obviously, there will be other opportunities after today, and we're very committed to that. Some of you might have missed the opening remarks where we acknowledged the challenge around COVID and that a number of members are concerned that they're not having face-to-face meetings. We totally understand that view, and we would welcome the opportunity to meet shareholders, but we have to do it safely, and we'll keep that under constant review. What I said at the outset of the meeting was that in the next week we're going to be meeting all our regional and area committees where we'll have small groups and an opportunity to engage back and forth between the shareholder and the board and management, and that we'll assess the situation at the end of next week. The other point that I mentioned at the start was that the special general meeting will be held online, so there will be a process for you to register and vote, and we will work with you to make sure that works as effectively as possible. And I know some of you missed that at the start of the meeting. So we will be communicating with you very clearly in the coming weeks. If you have any final questions, fire them in now. I see a blast literally coming into my computer as we speak. So this is really live. Will Glanbia percentage ownership of Ornua change, Jim?
No, there's no change there. So Ornua is contained within Glanbia Ireland and Glanbia Co-op, a great organisation that's growing significantly as well. We're the proud owners of 23% of that organisation, and we supply a significant amount of our product in there. Great commercial relations between the teams, and we will continue to be the number one and very interested investor in Ornua.
Okay, and then we're coming back. Sean, we might be virtual, but it's real. Can Sean please answer the question on the cost of rebranding? As financial discipline is so important, surely there's a maximum rebranding budget set. What's it going to cost, and will there be a maximum budget set?
So of course there will be a maximum budget set. I don't think Jim is going to let us run away with spending whatever is required there. We're working through that still, Pat, to define the absolute number. So I'm not going to quote a number right now and then find when we're finished the exercise it's somewhat different. But there will be a maximum budget set. The board will approve that budget in terms of the rebranding exercise, and we will work within that budget. But I won't profit a number right now without having got board approval for it first, Pat. I'd like to be generous in that regard, but the board will probably confine me.
It probably is worth saying, Pat, that the total contribution from the PLC is 5.5 million because there was 1.5 million agreed previously in the 2017 deal in relation to the contribution to transformation and identity. So as Sean said, we'll work out the budget once we have selected the appropriate identity and all that goes with that.
I've just got a text, Sean, about a very large elephant in the room today, and it's the availability of fertiliser next year. So, right. Sean is the Minister with responsibility for fertiliser, so he'll keep you informed, I'm sure, in terms of...
Thanks for that title, but it is quite an important subject, Pat, and it's very real for farmers right now. Clearly we have a significant challenge within the supply chain around fertiliser, driven by dynamics in the international markets, particularly around volatility and hugely inflated prices for energy. We are working with our suppliers in that regard, and we are committed to engaging with our farmers, and we will be coming out in the coming weeks in that regard to ensure that we do our very best, that none of our farmers, be the dairy, livestock or tillage farmers, are left without product in the spring months ahead. So we are working on that, Pat, and we will come out and engage with our farmers to ensure that we're in a position to meet their needs. But there is a significant challenge at the moment, both in availability and also at hugely elevated prices from where we would like them to be.
Okay. Tony Ryan sent in a comment, Jim, if you do not guarantee that you will be top tier for milk price in the Farmers' Journal for next year, how can we have confidence in your proposal? We've heard all this before and are still on the bottom every week. From Tony Ryan. Milk price commitments, Jim?
Yeah, so look, I think even in the current year, we have improved our position. We know that through the KPMG over the last 4 or 5 years, we have made steady progress against those above us, which is the Carberry Group, and nobody else has been above us in that time. But we know that the IFJ League is very sensitive for farmers, and we have improved our position over the last 12 months in that, and we will continue to focus on that. Look, the big issue here is that we're running a business on your behalf. With revenues of 2 billion or milk payments of 1.3 billion. Under any kind of risk assessment today, management or the board wouldn't be in a position to give a formula or a commitment that will hostage the organisation on your behalf in the future. We've seen that happen in other places. We saw a very bad situation down in Australia a couple of years ago, and we don't want to find ourselves in those positions. So we will set out to pay the best possible price. We'll have to be held to account, as you always do, in that, which is your want. No issue with it whatsoever, but giving a guarantee within fiduciary responsibility is something that we're not in a position to do. We'll do the best, we will pay the best possible price we can.
Okay, Chairman, to you, is the PLC share dividend ring-fenced to the investment fund?
Yes, absolutely. We have kind of 2 divisions in this new cooperative society. We have the operations divisions in one box. We have the investment fund, which will include the PLC dividend in another box. And there's a firewall between those. They're 2 totally separate units within the new cooperative society.
Okay, Jim, what brand names will transfer to the co-op?
All the brands that I put on the screen earlier, so there's no change whatsoever. All the assets of the businesses had transferred in 2012, 2017. So there's no transfer of assets or of brands or licenses in this transaction. So everything you saw on the screen, all our major brands, we retain and continue to drive.
Are we now going to be exposed to more milk price fluctuations, given that we may not have the PLC to buy our produce?
No, I think the other point that's very important here is that the PLC are about 2% of our total sales. They're a great customer and great customer for some high value products, but they're about 2% overall. So the PLC relationship is probably no more important to us than any of the big customers we have, Diageo, Danone, Abbott, any of those great customers. So separating from them now won't have an impact on our financial performance.
Okay, again, another comment on the urgency, not much time to research, discuss. Look, I think we're all very committed to giving you as much information as possible. This is just the start of the journey, and we'll very much be engaging in the coming weeks to provide more information. There'll be materials in the post on Glanbia Connect, there'll be videos. This is part of a process, and we're 7 days into it now, and look, we can assure you, everyone on this table and the wider board are really committed to sharing information, and in the coming weeks, there'll be lots of opportunities. This is only one of a number of engagements, and we're committed to that, and you can hold us to that commitment.
Pat, just to say on that, if I could, it's really important that we have a great debate over the coming weeks. That is really important to us. Every transaction that we have had incredible debates at farm level, and we are restricted in what we can do at the moment, but over the next number of weeks we are totally committed to the debate, because that's where all the real questions, where the tough questions and all the rest of it are answered, and we look forward to that, and already we're scheduling in lots of meetings on a virtual basis at the moment, depending on guidelines, but we will have the debate. That's critical to our shareholders and critical to us.
Okay, very quickly, last few that have just literally come in. Will corporate membership remain the same with the new entity? Corporate co-ops, you have corporate?
Yes, absolutely, Pat, yeah.
Okay. We're not paying a big premium for having paid down in GI since it was formed. So David, maybe to you in terms of this piece of, Jim mentioned 559 million of investment, a lot of debt being paid down. Are we not paying a big premium for having paid down debt in GI since it was formed?
I'm not sure I fully understand the question, Pat, but I guess the benefit to the co-op to date is that the benefit is 60% of it, and going forward they'll get 100%. I'm not sure that's nailing the question, but I'm happy to address it separately if that's helpful.
Okay, I'm literally looking at the clock. With interest rates so low, Jonathan Dwyer, sorry Jonathan, with interest rates so low, why aren't we borrowing the money to purchase the 40% in GI and keeping our controlling stake and our blocking minority in the PLC? So, and the other point Jonathan makes is, as a result of being paid below the average milk price, which was agreed to keep extra cash in the business. This has kept EBITDA high, which is now inflating the price we're paying for GI. Where are we overpaying for our share in GI as farmers? We've already taken the hit. So maybe, I think, David, you might comment on that for somebody looking in from outside at this point about, milk price, and then the piece around borrowing the money. Maybe, Jim, you might comment on that one in terms of with interest rates so low, why borrow the money, why sell shares rather than borrowing the money?
Sure. Look, there was a great deal of discussion at board level around the level of milk support and what that means to the profitability and the valuation of GI. So I think the members of the co-op can rest assured that point was well and truly factored into the negotiations.
Okay, look, I'm conscious of the clock. It's just 2 minutes to 1. Chairman, maybe I might ask you just for any closing remarks from you in terms of just what we've covered. Obviously, this is not the end of the process. It's the start of a communication process, but just any closing remarks from yourself.
No, look, thanks everybody for joining in today. Like we've had, this is our third Zoom session at this stage. We've had the council in a couple of times, and we've had all our committee members in last week, and today is the first day for all our members. So look, I commit as chairman that we're going to get out there and have as many meetings as we possibly can. And like, I think hopefully people have got a better understanding of our proposals today. Hopefully all questions are answered. But big picture, we really feel that we are best positioned with 100% ownership of Glanbia Cooperative Society in farmer hands. We are living in a volatile world. There's lots of disruption, there's lots of challenges. There's sustainability, there's environment, and there's market disruption, there's inflationary pressures. These are all real, but we really feel that we are best positioned to own our own co-op, to meet these challenges. And something, we feel there are many opportunities ahead as well, particularly in the sustainability space. We are really one of the lowest carbon emitters of dairy in the world. I think we should own that space, grab that space. So I really see a lot of opportunity ahead for us. So look, this new proposal will give us increased flexibility, to move fast. We will be nimble, we'll be agile, to meet the challenges that are out there. Like our board, as I said earlier, we're really committed to this, and we're really ready to take on this new challenge, and really looking forward, with excitement of what's possible here going forward. We see huge opportunity in dairy, and we're really excited about what we can do in higher margin business that will run alongside and parallel to our dairy business also. So again, an exciting journey ahead. I'll ask you all just to consider all these proposals carefully and pursue them at your leisure. We'll be back out again, and hopefully we'll have a vote pre-Christmas on these. So thanks again, and looking forward to your support. Thank you very much.
Okay, look, thank you for joining this live webinar. It was an opportunity to ask questions, and it's only the start of the journey, as we said. I want to pay particular thanks to those who submitted questions, and keep them coming. Those email addresses and text, we can deal with them in various forums. On your behalf, I want to thank our panel, John Murphy, our chairman, David O'Kelly from KPMG, Jim Bergen and Sean Malloy. The board has put out its proposals. We'll now engage next week with the regional and area committees in detailed engagement. And I suppose, look, it's important to remember a key part of being part of a co-op. The board proposes, but you decide. So as shareholders, I'd encourage you to engage with the opportunities to learn more about the proposals, and when the time comes, please register and vote. It's really important. We've had huge turnouts at recent years at Glanbia votes, and just because it's online, that shouldn't be any different this time around. Everybody can register and vote. We will be sending materials to you by post. We'll be putting materials on Glanbia Connect. We'll be putting information in our 52 agri branches, and don't forget, obviously, to contact your local Glanbia representative in terms of the team that you know locally, and engage with them and put your questions to them, and we're very happy to deal with them in whatever forum. If you have any questions, be sure to send them in. Now is the time to ask them. I'm going to thank you for joining, and I'm now going to close the meeting. Thank you.